Hello and welcome to this conversation, BloombergQuint. Dr. Kaushik Basu, former Chief Economic Advisor of India, former Chief Economist at the World Bank and Professor of Economics at Cornell now, is in Bombay, and we're catching up with him on the sidelines of the Lalit Memorial Lecture. So thank you so much. Lovely to have you.
Thank you very much.
Dr. Basu, you've got a speech coming up. You're talking about what India can do to sort of seize the moment in the global economy right now. Broad theme, what specifically do you have in mind, sir?
The broad theme is that the global economy has gone through a very difficult phase starting 2008, and that's continuing. It's the rich countries that have taken the hit on this. We are at a juncture where for 7-8 years the United States, Europe, they have been growing slowly, and this is a kind of moment where relatively poor countries, the emerging economies, developing economies, have an opportunity, especially countries that are importers of oil. And in this situation for India, it is rightly so. There are global players who are very positive and optimistic about India, and that's rightly so, because these things create an opportunity for not just India but even countries in sub-Saharan Africa, certain Latin American countries. But I do believe India is in a particularly good wicket right now and can take advantage of that. What should India do to take advantage of the global situation is what I'm going to talk about today.
Okay. Unfortunately, Dr. Basu, we've had a very sort of volatile last 12 odd months, right? We've got demonetization, which hit us out of nowhere. We've got GST, which we always wanted to get, but it's come very quickly after demonetization. So the economy has been going through bumps. What is your impression?
You see, the economy had two good policy moves and one, unfortunately, not a good policy move. The GST is a wonderful move. There will be teething trouble. The rates will be homogenized, all that you'll have to go through. But I will actually be talking about GST for a while in my talk. There's also the bankruptcy law, which doesn't get enough attention. But for a country like India, where quickening up business processes is extremely important, the bankruptcy law plays a role on that. These two very good moves. Demonetization, to my mind, was a very unfortunately designed intervention. It's not going to achieve what it was supposed to achieve, and by slowing down the smaller players and the informal sector, it will have an effect on the economy, which we are already seeing. But luckily, two moves which will have long run good effect, one move which will have a bad effect but over a short run, means India's medium to long term prospects are indeed very good, and that's the way I think most global players are viewing India.
But Dr. Basu, so we are not clear on how the shift from informal to formal is going to take place, and how sort of painless it will be, both in terms of growth but also in terms of jobs, which in any case is a conversation that India is very uncomfortable about the pace of jobs. It's not going to be a painless move, is it?
It won't be painless, but that particular move where you're moving to digital currency from paper currency, anyway, that has to be a slow move. India is not going to leapfrog over Scandinavian countries and become an economy that is digitized. So it's going to be a slow move. The mistake that I think the demonetization did was it tried to hurry this process too much. So if you allow it to happen a bit more naturally, making small interventions over time, it'll be much less painful and you will gradually get there. But there is no escape from the word gradual. You can't do this kind of a change very quickly. In India, where roughly half the population doesn't have bank accounts, you can't really get there in a leap. And even in the United States, you can't do that. A couple of Scandinavian countries are close to that, but still they have a couple of miles to go.
With these things behind us, Dr. Basu, how soon do you think we can accelerate back towards at least 8%? We went from 8, came down towards 7, and then in the last quarter numbers we had 6.1.
It will take a little bit of time. I was actually expecting 8% would have happened this year, and I do feel that the demonetization slowed it down. But we should be able to get back to 8% again over, let us say, another year and a half, because as the GST's good effects get into the economy, the bankruptcy law, which we will see this year, the new bankruptcy code, whether we are managing to help firms wind down quickly, 180 days is what India wants to do, which is going to be faster than what is done in United Kingdom, for instance. If we go some of these steps, then in another year and a half, we should be back again to where India really deserves to be.
A quick word, Dr. Basu, on inflation. There seems to be a glimmer of hope that we've managed to structurally pull down our levels of inflation. The Reserve Bank isn't entirely buying into it.
Yeah.
How do you see the inflation picture? I know you're not focusing on day-to-day numbers,
but no, the inflation concerns me a little bit because it did come down. In June. It was virtually a deflationary situation. It's picked up. Tomatoes taking the lead. It's picked up a little bit. The inflation actually worries me in a particular way, that we do not want to get into a sustained super low inflation phase. So
what would you define as super low for India?
You know, if it remains at 1% per annum, 1 to 0% per annum, at first sight people feel good. Prices are not rising. But the job market begins to suffer. Growth begins to suffer. We have seen this happen in countries like Japan. So my worry right now is that we don't want to get into a period of, say, 3-4 years of inflation remaining very, very low. In a country like India, you want an inflation somewhere between 2 to 4% to hold it over there. So for that reason, I was in favor of going in. For instance, if you're talking of repo rates, I'm glad RBI moved the way RBI moved. I would have moved a bit more and taken the risk of a bit more inflation, because I don't think that is a very big risk. Where India needs a boost is to give a boost to its investment, infrastructural investment and growth. And it would have given a little bit more boost on that.
So you think real rates are too high, and as a consequence of real rates, people are also saying that we're getting too much inflow, which is leading to appreciation of the rupee.
And you want people to be able to borrow easily in order to invest, because India's investment has been falling. We as economists watch the investment to GDP figure more closely than people on the markets, for instance, watch. India's investment to GDP ratio has gone down to 28%.
Below 30%.
Not atrocious, that's good enough, but India had gone to 38%. And a country like India should try to remain between 35 and 40%. So we do need to give a boost to that. And interest rates are the major way to give a boost to investment.
Last question, Dr. Basu, global picture. I think markets are preoccupied with the unwinding of the Fed balance sheet, which may start in a few months from now. The general theory is that emerging economies, particularly India, are better positioned now. Reserves are higher, inflation is under control, so you won't see the taper tantrum kind of issues. Is that a fair analysis?
I think that's a fair analysis, especially vis-a-vis India, which has seen its reserves go up. China's reserves are huge, but it's been going down. China's reserves, starting from 4 trillion, it's been coming down somewhere around 3 now. India's is going up. India's strong on that. India's labor cost is still low, so it can really get into the manufacturing sector in a bigger way. So I don't think that the taper tantrum that had affected India severely is going to affect us now. But we have to be prepared. I mean, United States is going to do this soon. Europe, which has been injecting huge amounts of liquidity in the system, will go into a reverse at some point. So we better be strong to handle these.